I want to thank everyone for joining us this afternoon. I appreciate you taking time out of your day to hopefully um, learn something from the materials that I've presented. I by no means have every answer that you may be looking for, but we are going to walk through some of the government's response to date as we've been after this now. I think this is my sixth week of work from home, April 27th on a Monday, and been kind of at home since uh, March 16th myself. But I've been monitoring the legislative action at all three levels of government throughout that whole time. Introduction on me: I know many of you know me. I know many of you. My name is Eric Myers. I'm the Government Affairs Director for the Minneapolis area Realtors. I have a bachelor's degree in political science from the University of Minnesota. I actually went out east to Boston for my first year of college, and then returned home to save money on tuition. So I've been actively lobbying in Minnesota for 20 years. I've represented the Realtors for 12 years since February 2008. So I'm quite knowledgeable in the Realtor crisis world, because I joined right at that time. Never a better time to join working for Realtors in the advocacy space than February of 2008, working through the foreclosure crisis with folks. So if you've been in the business a long time, or if you've been in a short time, just know that I've kind of been with you through the trough and back to the peak, and now we're going through another thing here. I worked in the Minnesota House. I've worked in the Minnesota Senate. I've worked as legislative campaign staff. That means door-to-door paid staff. I worked on a statewide issues advocacy campaign on Minnesota Freedom to Breathe. So if you like smoke-free bars and restaurants when they are open, I had a small role to play in that. If you would prefer to continue keep smoking in restaurants, then again, it was a very small role. So, and then I was involved in an advocacy practice at a large law firm, and kind of really got exposed to a whole range of policy issues because we had clients in many, many different business types. So my role generally is to keep, in any normal time, whatever normal is now, is to keep track of what local governments might be doing that could impact, or as I like to think of as, prevent barriers to your real estate practices. So generally, like I said, in normal times, I would be waking up every single day and asking myself, what are the cities inside the 5-county area in and around Hennepin County doing that might impact your business? And you all may know of some of them: sign ordinances, point of sales, rental regulations, just on Minneapolis energy Tish, stuff like that. So that's my day-to-day, and my approach during the pandemic is to be a little more holistic in my delivery of government affairs for Realtor members. So throughout this time, I've been monitoring all three levels of government for you to the best that I can. And the reason for that is, things that pass at the congressional, and we're going to cover three levels here today, but the reason for that is things that happen in Congress get pushed down to the states, and I'll have some examples throughout this, but the legislative change takes place in Washington, but where that change happens then, gets implemented back in the states. And I think one example of that is unemployment. Unemployment changes at the federal level, but it's administered by the states, and you apply on a state website, and if you were to be able to apply in person, you'd actually apply at a county office. So you can kind of see all three levels of government working throughout that time. Definitely during this time, with all sorts of new rules at all three levels, and new executive orders and laws and everything that's passed, if I were to be focused in on just the one level, I'd be missing quite a bit. So that's not really helpful for you all. So we're also watching the Minnesota House, the Minnesota Senate, any executive orders, and then all the guidance from HUD, IRS, Treasury, and others. And we can walk through some of those. There are some resources here. We can make these slides available to you through the education department afterwards, or so that you can have these active links. they're on the Minneapolis website, COVID-19 resources. You can click through here, and there's a real nice page that operates really well, kind of that collapsible tree type page. The same thing at the Minnesota Association of Realtors with a little bit different bend on some of the questions, a more state bend. And then NER has a lot of resources and guidance on a lot of the changes that have come out of Congress. And I've incorporated some of them here. There might be some questions on this call, or if as you take these back to your office and share with others, what about this, what about that? I would check these. If you get what about this, what about that questions in your office, I would have someone, either yourself or someone on staff, go through and just check these resources, because if it's been asked, it's been, like my experience throughout this crisis has been, if it's been asked before, and it's generally covered by one of these guides. I wanted to mention the Minnesota housing website has just launched a new page here, and again, we'll get you this the PowerPoint so you can link through the slides. This is what the top of the landing page looks like, and then they have a collapsible tree on the bottom as well. And that's going to be mostly for Minnesota specific housing stuff, a lot of resources on the nonprofit side, but you may also find some things useful in there. This is a new ad this week, so I just threw this in. As you're all aware, stay-at-home orders, realtors have been considered essential. Orders can be rescinded at any time. I do recommend that you and all the realtors in your office are following any and all CDC guidelines, and always keep in mind we're trying to avoid negative public relations, and that would be, an example of negative public relations might be having too many people gather at a listing, especially if it's your name on the arm sign or not. But having too many people gather at a listing and then having people record that and turning that into news and saying there's too many people here at one time. There's a lot of good advice on the websites about a lot, and I've talked to a lot of realtors that are leaving at least a half an hour between showings. Sometimes an hour is very standard as well between showings, leaving everything turned on so that people can come in, do the showing, touch nothing, and leave. So, but just kind of be aware that anything you do, you are in the kind of the public eye. That's kind of the point of your business, is to be pretty well to be seen, but we want to make sure you're being seen well. Foreclosures and evictions are suspended during this time, and there are two orders in place here. There's a presidential order that started on March 18th and runs for 60 days. And that applies to all HUD properties, FHA, VA, Fannie, Freddie, etc. So it doesn't go beyond that. It's 60 days. You can't start a foreclosure or an eviction activity during that time. Overlapping that is the governor's order 20-14, and that order is no foreclosure or eviction activity to the extent that you can't actually physically move someone during the entire duration of the peacetime emergency. The peacetime emergency has been extended once. It could likely be extended over and over again, even if people are allowed to go back to work. So, and the governor's order in this case applies to all property types and not just FHA, VA. And then specific to the realtors are essential, but that essential rating is specific to facilitating transactions. And this includes appraisers, realtors, title inspectors, and photographers. There was a question at first in the first couple weeks of the order if photographers were allowed or not. There was some back and forth, and then about a week's worth of telling folks that photographers were not allowed, and then orders were changed. Minnesota stay-at-home orders are now through May 3rd, and they could and are subject to change. And we'll talk more too. I have a later slide about that. Is there any questions here on this? Oh, this is one of my pause points, I think.
Feel free to type questions in the chat window if they've come up, or raise your hand. We can unmute, or I believe we're in meeting, so you can unmute yourself and ask your questions.
Everybody should be pretty familiar with this at this point. So if there was no questions, I get that.
Yeah.
I'll move on. If there is, just go ahead and let me know. As of today, April 27th, the governor's orders have changed with regards to non-critical industrial and office-based businesses. And some of them are allowed to return that are non-customer facing as long as they meet some of these requirements. And you can see those here. And the first one is that they have a preparedness plan and that they meet MDH and CDC guidelines and OSHA standards as well. And that they're following health and safety protocols outlined in Executive Order 2040. And that there's a link to that directly there if you have any questions about what the wording of that order is. And then even to, just so people know, if you were to get this later and you want to review any of the governor's orders, the EOs 20-40, 20 is the first half of 2020. So, and then 40 is the 40th executive order in this string. So, but if you click that link, you'll end at a page where you could read any of the governor's orders. Actually, it'll take you to a page that goes directly to that order, but you can go back and search through and get the other orders as well if you're interested. And then the third one is to continue to encourage folks to telework as much as possible for employees who can accomplish their work otherwise. So you may have seen newspaper reports late last week and over the weekend talking about this will allow 80 to 100,000 workers back. I can't go back. I got to go back. Back to work, and that's certainly that is the case in terms of the calculated estimates, and we just don't know what that's really going to bear out. This morning's paper was talking about 100,000 workers times 5 days this week. So this morning's paper was talking about 20,000 workers potentially starting up right away today. I do think this will steadily increase, but I'm just not sure if those numbers are based on those sectors and the workers in that sector. So and then again, they do stress all workers who are able to work from home should still continue to do so, and you're not required to carry any paperwork. This is not gonna, so they basically say they aren't gonna plan to turn this into any kind of police state where you're gonna get me, pulled over and asked why you're going where you're going. There is guidance on whether your business can reopen, and there's some links to that stuff here. And if you have additional questions, there's more links and more documents on this page. And then just this was last week, Thursday, the governor put out a 16-page PowerPoint, and this was one of the PowerPoints, or this was one of the slides in that PowerPoint, and you can kind of just see their strategy in terms of how they're going to, this isn't a light switch, this is a slow rolling dial, and so they're going to start with, critical services that were left on, of course. Now they're switching over. If you see the left side of the screen here, office industrial is being kind of ratcheted up, and the ratchet up over time will be single shops and malls. So there's kind of those larger, less predictable, larger scale operations. And the same thing for social as well, stay at home, family gatherings. So you can kind of see the dial. And this is going to be the realm in which the governor considers changes going forward. Anyone that doesn't know, the governor holds a daily press conference at 2 o'clock every day. Sometimes it's just him, sometimes it's him and Jan Malcolm, sometimes who's the commissioner for MDH, and then sometimes it's him and the deed commissioner and a whole range of folks. So every day at 2, there's even more updated information. Any questions to that point? Okay. I will just keep going. Unemployment insurance, we should all be pretty familiar with this as well. The unemployment insurance, the congressional action on unemployment insurance, Minnesota is, without federal intervention, is typically 26 weeks of unemployment insurance. And by the 27th week, if you were to go to apply for unemployment insurance, you'd be no longer eligible because it's that kind of, yes, it's run out for you. So the congressional law went ahead and added 13 weeks to the 26 weeks. So you now get 39 weeks of unemployment insurance. It does apply the $600 boost, and Minnesota's max unemployment number in regular times is $640. Minnesota also went and added an extra $100. So the max for Minnesota in regular time without the federal boost is $740. So then the with federal boost amount would be $1340 max, and it's applied on a scale based on how much you made when you were working. So that $600 federal boost has been in place for a number of weeks now, and that's pretty helpful. And you've probably seen some stories too that in some instances here and across the country, sometimes unemployment with the $600 federal boost amounts to an amount that it ends up being higher than the worker's regular pay. That's not the case everywhere. That's going to be a case by case and state by state. I mentioned the $640 max for Minnesota and now $740 during this time, plus the $600. Arizona's, by comparison, their max is $240. So the highest end workers in Arizona that file for unemployment are only getting $240 per week from the state, and then adding a $600 federal boost at this time. So yeah, it kind of varies by the states and what programs they had in place. And then 600 is on top of whatever the state's doing at this time. We've been waiting for guidance. The CARES Act from Congress had had made changes to allow 1099 gig and freelance workers to apply for unemployment. And for the better part of the last 3 weeks or so, since the passage of the CARES Act until about late last week, we were waiting on federal guidance to the states so DEED could actually employ this. At one point, about a week or 2 weeks ago, you could actually get on and start applying for the first time for unemployment insurance for 1099 workers. A number of our members have. I've talked to a number of members that have, and those people were put in a waiting room or a queue, or they were told something kind of innocuous like only $0 is available to pay you. So I've heard that from a number of members as well. But even the $0 comment meant you were still in the virtual waiting room. The official word on 1099 unemployment, the words from the Congressional Act were these three that you see in front of you: PUA, Pandemic Unemployment Assistance. So you will hear, if you see YouTubes talking about PUA, or people talking about PUA on Facebook or other places, or in my updates with the association, or here, it refers to Pandemic Unemployment Assistance, and this is specifically unemployment assistance for 1099 gig and freelance workers. So you can apply for unemployment insurance as a 1099 worker, including realtors, right now. If you already have, I'm not sure if that's on my next slide or not. Yes, we'll cover that in a second. So previous. And then of course, stimulus checks, you should all be aware of this. This is kind of review for most folks. $1,200 per single, $2,400 per couple tax filer. If you're under these income caps, if you were a head of household, you received a number between $1,200 and $2,400, and then there's a $500 additional for qualified dependents, and they had to be 17, or they had to be under 17. There was an app, the IRS application, where you could say, "Where's my stimulus?" And I just want everyone to know, almost no matter what happens, and I say almost, and that's why there's an asterisk here, this stimulus will not reduce your 2020 rebate if you had one coming. So for example, if you traditionally file your taxes and you get about $2,000 back from the federal government, and you would have anticipated no tax changes from this year to next year, and you would have again been expecting $2,000 back for your in 2021 for your 2020 taxes, this stimulus will not reduce your taxes. This is a tax rebate. It's an upfront pro-offered rebate that's added on top of what you'd already received. There is one rare circumstance by which you could potentially reduce your 2021 tax payment amount, and that's if for some reason, if you hadn't filed your 2019 taxes this year and the stimulus was mailed to you or forwarded it to you based on your 2018 taxes, but if in 2019 you would have made beyond this cap, it could potentially reduce your tax, and it could potentially be subtracted or added to, in terms of you could owe more next year in that rare case. But for most people, it will not. So here we go next. If you have already applied for regular unemployment benefits, you don't need to do anything extra. Deed will establish a PUA benefit account for you if you are eligible. If you have not applied for benefits yet, special instructions for self-employed and 1099 workers are available, and they're available here via this link. If you have and you haven't heard from Deed yet, don't worry, they're working through it and they're going to get back to everybody. So you will hear one way or the other about the ultimate decision on your eligibility. If you were, let's see if that's next. Yeah, so you will receive information about your PUA benefits online or in an email or by mail. And applicants who receive PUA benefits will also receive the $600 federal boost. And it will be backdated to whenever you first became eligible. So for those folks that have already applied and they were eligible 3 weeks ago, 2 weeks ago, the PUA applied amount, if you are deemed eligible in the near future here, will be backdated. So it could potentially be more than 1 week's worth. And if you have any more questions, you can land on the Deed website, and here's a link down below as well. Any questions on that? No?
I don't believe so.
Okay, I think it's pretty clear as mud, maybe, I don't know. Well, I have been talking to a number of realtors that have applied early on, and I asked them if they'd be willing to keep me updated on their status so that we could kind of test in real time how well this is working. And I've heard from members, and I hope to hear from those same members, this cohort I've kind of developed. I hope to hear from them over the course of this week and next, and be able to keep you guys really updated on, yes, they've made, whatever the updates are. If maybe they, at some point, I'm sure even as they go backwards to address batches of the PUA beneficiaries, I'm sure they'll work in some logical order, maybe alphabetical. And so we may hear from Deed at some point that they've done with A through H, and they're working on the middle section now, and we may hear things like that. But so we've kind of informally helped create that as well. So Congress last week did pass a bill to refill the PPP program. So I'm going to talk about both SBA programs now. They call it Phase 4, or and I have Phase 4 or Phase 3.5. It was being reported as Phase 4 throughout the country, but Congress had a joke amongst themselves that it was only Phase 3.5, and so there was some kind of inside nomenclature going on there. It's kind of a weird thing. So depending on who you talk to, it's either Phase 4 or Phase 3.5. If you are on a call directly with a congressman or woman from Minnesota and they use 3.5, they're talking about this. If they use Phase 4, they're talking about this. So it's kind of both, or either or at this point. It was an additional $484 billion supplemental bill. So you add that to the CARES Act, which was $2.2 trillion, and you're looking at $2.684 trillion. We can talk about large-scale math numbers at a different time, or you can call David and talk about large-scale math numbers. I've done some large-scale math number games, and it's interesting what those numbers work out to per citizen and per taxpayer, but we won't go there here. So it was passed in the U.S. Senate last Tuesday in a pro forma session. It required unanimous consent. That means no senator would be allowed to, if they had to have no senator object. If a senator objected, the bill would have been killed because of the Senate rules. It was strange. It was the first time I had ever seen this tactic being used. Some of the reason that they were doing it obviously was COVID-friendly practices, but I will tell you that a $484 billion supplemental bill passing the U.S. Senate with only 5 people total anywhere near the chamber was kind of extraordinary. So from just kind of an academic standpoint, that doesn't happen. By Thursday, when the House was voting on it, they were taking turns and wiping down the lectern in between, and every member of the House that wanted to vote had to be there to vote. They weren't allowing any proxy voting. But there was a huge non-voting block for the House. The bill has $310 billion refill for the Paycheck Protection Program, which was one of the SBA programs that ran out of money during the last round. You guys may have been following that in the newspaper. $60 billion of it was specifically set aside this time for banks and small lenders. This was an effort to increase access for people that were complaining, and you may have seen some of the stories like Wells Fargo at some point, we have no more money, don't even call us. So this $60 billion for the community banks and small lenders, this was an attempt to reach small businesses and to provide a little more bandwidth, if you will, with regarding this loan. And then $75 billion for hospitals, $25 billion for testing, and $60 billion for EIDL, disaster loans and grants. We'll walk through some of that. So we'll walk through a couple. So the 2 SBA loan programs are PPP and EIDL, and they work a little bit differently. They have different things. PPP is a brand new invention. EIDL had kind of been around for a long time. PPP is for small businesses, sole proprietors, independent contractors with 500 employees or less. Same thing with EIDL. It's meant to cover payroll expenses, including benefits, mortgage, interest, rent, utilities, and interest on debt incurred before this date. And then similar things being covered with EIDL, payroll, fixed debts, accounts payable, and other expenses that cannot be paid because of the disaster's impact. And the EIDL has a longer history. PPP was a recent invention, but EIDL has a longer history and had been used time after time after time in other disasters and not just health-related pandemics. So there's a lot of information on this page. The PPP is meant to be 2.5 times the business's average monthly payroll, capped at $10 million. And there's some requirements here. And then up to $15,000 grants on the EIDL side. $1,000 per employee, up to $15,000. 1% interest rate, 3.75. And then the terms are different and more information. Bottom line here too is that the PPP program, you are supposed to work directly with your small business lender, your SBA lender, and the EIDL program, you apply directly at sba.gov. So this side, the right side, EIDL is all your information. You have to have all your statements and all your, because you need to prove all these things, what employees, what expenses, what numbers. So you're going to need all your P&Ls and all your monthly statements, but you're going to be applying directly with the SBA. And on the PPP side, you're going to need all that documentation, and you're going to be working directly with your lender. And then if you meet certain criteria within these, and you can learn more about this on NAR.com or with your lenders or at SBA.gov, but if you complete these and you continue to meet the criteria throughout by not laying folks off for 8 weeks, you can see that here. If you do that, then some portion of the funds are forgivable. If you don't do that, or you do that at some sliding scale, then all of it could be due as a loan. You see the terms again. All of it could be due, or some portion. So just be aware of that. So quick guidance, since they refilled the program, if you've already applied for an EIDL, you don't need to do anything further. Go back. You don't need to do anything further. SBA is still processing applications. If you've not already applied, check back at the SBA page and show up there as if you're going to apply. Make sure you have all your documents ready. And then if you had already applied for PPP with your SBA lender, check back in with your lender and kind of, do a status check with them, see where they're at. And if you had not, you want to reach out as well and talk with your lender. So tons of it, but you can see too, and there's a lot of good resources online. What things should I have ready? And if you land at the SBA site for both programs, you can get a complete list of what documents you need to have ready to even begin applying. So from the first round, how well did Minnesota do? Well, Minnesota received 33,819 emergency loans. So I think that's actually both programs, and for a total of 7.6 billion. So Minnesota's share of the first 349 billion was 7%. So not all that bad when you consider some of these other states. Obviously, there's some big jumps here as well, but you can see we compare pretty well to some larger states and states with larger populations than us. And with that, are there any questions to this point? Everybody's just soaking it in.
Yeah, you're doing a good job.
All right. Other CARES Act provisions to be aware of. There's a whole laundry list. These are some of the ones I thought you all might want to be aware of. If you have federal student loans, no payments or no interest for 6 months and no penalties has already been applied to your account. So at first, it was taking some servicers some time to apply this, but I was even able to test this myself. I'm in the last 5 years of payments on my own student loans, and I signed in about a week or two ago, and it said no payment is due until I can normally pay. I would have paid on April 28th, so it said no payment due until October 28th, 2020. And during that time, no interest and no penalty is accruing. And that's really helpful too, that no interest and no penalty would accrue. Because if it would just be a straight forbearance without that provision, my student loan compounds daily. And so that could have been accruing that whole time, and that's not necessarily a positive. But having no interest and no payments is a pleasant place to be. The other flip side of that is if you can afford to keep making your payments, and you do, every payment you make right now, so my student loans are like $300 a month, all $300 go to the principal payment during this time. So folks that are still employed, working from home, they have a choice to make between cutting themselves a break and or paying down their student loans at full principal, 100% principal amounts. And then there are special rules on accessing your retirement funds at this time. There's a whole list of if you take out up to this much and you put it back by this time. So just know that there's some flexibility on those rules. I know a lot of you think to yourself, gee, I can't ever touch that money until I'm of retirement age. In this case, if you absolutely needed to, you could access some of those funds during this time, as long as some of it's paid back. And they'll walk you through all those rules, and be aware of those rules before you take anything out, because some circumstances you're good to go and others you're not. But as you think about realtors and I know NAR on some of their webinars was encouraging realtors to take out their business plan and amend it and move cash flow around and really set their business up for success given the new realities. I think that's absolutely smart advice. And I just mentioned this one on the special rules on accessing retirement funds, because if you're sitting there at home and you're like, boy, I could really make it to next month or the next month after that if I only had X dollars, this might be a place that you could access some funds and not pay too many penalties, if at all, depending if you follow those rules. Just be aware of that. The 2017 Tax Cut and Job Act had reduced the charitable deductions for non-itemizers to 0. The CARES Act reinstated the $300 charitable deduction for 2020 taxes, and you need not itemize. So if you filed like I did last year and you didn't itemize, I could give $300 to charity this year, and it will be deductible in 2020 taxes. A little hit on this one is I follow a federal publication out of DC Weekly, and it's called the Morning Tax Report for Politico, and there's some discussion about even increasing this dollar amount, so that, because they know there's some imbalances right now. They know that there's people that have been hit really hard by this pandemic, and there's other folks that have been kind of largely unaffected. So stay tuned. That $300 number might even change. But for now, know that you can give $300 to a charity, and it will be deductible for 2020, whether you itemize or not. And then on the employee, and this is on the payroll side, so I don't think this applies to a lot of our members. It does apply at our association and any business running an actual payroll, but there's an employee retention credit. There's a delay of employee payroll taxes. And then for a lot of our members here, tax deadlines have been extended, 1031 exchange deadlines have been extended, tax opportunity zones have been extended, all out to a uniform federal deadline of July 15th. So there's a lot of provisions in there that apply to our members. And I guess I will pause there. Are there any questions? David, did you check your student loans? You there?
No.
You haven't checked them yet? Okay. Well, take a look, because they should have applied that stuff by now if it's a federal student loan.
Let it ride. I'm in it for the long term.
That's right. There you go. The Minnesota Legislature, they were running a $1.5 billion surplus. Just be aware that it likely becomes a deficit now. And this is and just remember too, the $1.5 billion surplus was a projected surplus, and a projected surplus assumes a lot of things, and it assumes certain revenue amounts based on the past. And then whether those revenue amounts come true or not are always a function of, their ability to project and some reasonable margin of error. But in this case, with a pandemic and a lot of businesses shut down and those taxes not being remitted to the state economist, she ran a zero revenue model. And so they ran a model, so they asked themselves, what's the worst case scenario? The zero revenue model took the $1.5 billion surplus and turned it into a $1.5 billion deficit just by running that model. Now, I would submit to you, again, a lot of businesses have been unimpacted, and they have been remitting taxes, and other payments have been remitted to the state. So I don't think a zero model is going to come true. I think there's some reason to run a zero model and be aware of what the worst case scenario could be. But just understand that a $1.5 billion surplus previously projected probably becomes a deficit in this situation. How big of a deficit is going to play a part in how the legislature finalizes their legislative year here. New state economic data is expected the week of May 4th, so next week. The bonding bill was previously presumed on both parties, Republicans and Democrats, with low interest rate environment. They were planning to spend over $1 billion, and David and I heard from both the Speaker Hortman last week and Senator Chamberlain in the Senate, who's in leadership, And now I think you can expect a bonding bill closer to $700 million. And those go to pay for those construction projects like roads and bridges throughout the state. So there's a real impact. There's also housing, low-income housing that always gets asked for bonding as well. There was a bill, HF 4541, and its companion bill, Senate 4495, and it would further restrict eviction and foreclosure activity during the emergency. And then it was requesting $100 million in FPAP, a Family Homeless Prevention and Assistance Program. That bill was in committee last week, but didn't see any floor action. The Minnesota Legislature is out until May 4th, and I think that's smart. They're out until when they're going to get that economic data back, and then they'll be back in. It's been really weird during this time when they are in, because they've been taking turns on the floor and spread out all throughout the Capitol. My state representative was on a folding chair in the lobby, and then when it was time for her to vote, they'd call people in groups of 6, and they'd come in and vote. So it's been working a little bit differently. They're expected back May 4th, so probably no action on that bill before then. And then I would expect to hear more chatter and increasing calls for pay increases for frontline workers. Those folks are out there. Very often they are the lowest paid folks in our society from time to time, and it's just politically, it's one of those times that we're just kind of re-examining that. I mean, if you have to think of that Walmart stocker, putting one more can of beans on the shelf for the 10,000th time this week. I think you'll continue to see those kinds of discussions, and then also that the frontline healthcare workers too, not just any frontline worker. So I think you'll hear more about that. The Minnesota Legislature is constitutionally required to be adjourned by May 21st-ish, and so they won't likely work beyond that, except that I've already heard rumors that there would be potentially a June 12th special session if certain things can't be gotten done by the deadline. And this Minnesota Legislature, and I'm not saying this about one party or the other, but this Minnesota Legislature over the last 10 or 15 years or so is kind of like their special sessions, and it's easier to track the ones that they don't have than it is the ones that they do have. So I think you can anticipate that there might be a special session this year, and that's just because this crisis keeps evolving and the policy responses to it are evolving as well. The Minneapolis City Council has moved to a temporary and smaller committee structure. They usually have like 10 or 12 committees. Right now, they only have 3 in a 2 in a subcommittee. They have enacted a hiring freeze, and they have begun enacting a wage freeze. They have enacted a wage freeze for their non-represented employees, and they hope to have a deal in place with the union by April 29th to extend that wage freeze for all city employees, whether you're non-represented or union represented or not. And just the wage freeze, so just the planned increase or the budget available for the planned increase, saves the city of Minneapolis $6 million. They're also delaying large purchases, and that also has, from a cash flow perspective, has some benefits as well. Let's see. And that's really it. That's all I have for you. Any questions?
Guess
David,
everyone must.
we've got a little more time. David, do you want to talk about some of the charts you've been doing and your call on Thursday?
Yeah, I suppose. We are going to have a nice update of most of our charts with buyer and seller activity and actives and showings and whatnot, kind of track what's been happening. So working on our Monday blog as we speak, with a little bit of an update there. And then most of those will be kind of woven into my Thursday webinar to give you guys an update and keep you empowered with the info you all need to succeed.
And listings are up, showings are up. What's going on there?
Showings are definitely up. Pendings and listings are still kind of flattening out or down slightly. But we've definitely seen some acceleration on the showing side of things.
Okay.
Yeah. So things seem to be still happening. It obviously varies by price point and area, as it always has. But things are not dead out there, and we see that in the data, and Eric and I and others hear that anecdotally as well.
Thank you for all that work.
Of course.
And then Telly, were you on? Telly, do you want to, if you are on, do you potentially want to talk about the foundation and the recent funding decisions?
Yes, good job, David and Eric. David Arbit, our Director of Research and Economics, with his webinar on 2 o'clock on Thursdays. And Eric Myers, this is your debut with this webinar, and we'll be offering this every 1 o'clock on Monday, every Monday at 1. So that'll be really nice to look forward to that. And you'll be getting a PDF of this presentation as well following this. As far as the offerings that we have a COVID-19 page on our website that has a ton of resources for you to reference. Eric referred to that during today's presentation, so please visit that. The link is right on our homepage, so it's easy to navigate to, and it includes a lot of information that was covered here today, as well as information about our education and professional development offerings as well, and business operations from MAR. The Foundation Board of Trustees recently voted to provide $40,000 in relief to nonprofits that have urgent needs related to the COVID-19 pandemic. And these are nonprofits that the Foundation had previously supported. So they had been previously vetted for eligibility. And we did do a survey of these nonprofits, asking them for their needs, and was very happy to provide $5,000 grants to 8 different nonprofits. There's another grant program that is currently taking applications from the Foundation, and that is the annual grant cycle. And that deadline has been extended to May 19th. And so that's another opportunity for nonprofits to apply for funding. And I should say that the Foundation is funded by member donations. So these Foundation efforts are being supported directly by our members. And for that, we thank you for your support and providing this urgent critical need right now during this pandemic.
Great, thank you. Well, Rosie, I think that's all we have. If there's questions, we have 5 more minutes, but.
Let's see, I just saw something pop up in the group chat. Looks like Kelly says, thanks for sharing a PDF, great information. No one from our agency has received notification from DEED regarding eligibility for UI.
Yep, so that was at the end of last week, and it will be in trade today. So it'll be in Today in Real Estate, the publication, the association's update today for the first time. We got it late in the day last week, Friday. So we shared it a little internally, and then it'll be in the, like I said, it'll be there today. So
wonderful. Outside of that, it doesn't look like we have any additional questions. Thank you so much for your time and knowledge, and there's a lot to digest. So we look forward.
And I appreciate the folks that are on this call. I know we had a limited turnout, but I do appreciate the people that are on this call, because I know all of you are great connectors. So you will take the PowerPoints and the information back with you and share them widely with your colleagues in your office, and we appreciate all that as well.
Yes, absolutely. Well, with that, I hope everyone can get outside and enjoy the weather. It's gorgeous. We appreciate you spending an hour with us, and we will see you next week.
Great. Thank you.
Thank you.